The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke here at 100 South Broad Street, Philadelphia, Pennsylvania. This is Billy Ray Valentine reporting for TFNN. Okay, folks, we're going to go across the pond here. We're going to go all the way to India. We've had a request from one of our listeners to say, do these patterns that we look at in the stock market for the United States, do they work in foreign markets? And as you can see here, the chart that you're looking at is the, and you're not looking at it yet because I haven't posted it, but this is Tata Steel. It's the big steel company of India, and as you can see, it has some incredible patterns that are here. Folks, this is done by one of our friends. He's 17 years old. He's just getting ready to start college. He has a really strong interest in finance, and as you can see, he does all of these patterns by hand. These charts are free through investing.com, and what he does is that he draws in everything and puts the ratios in. He does the calculations with his own computer, and he's doing a terrific job for a young man at that age. I would have I had my mind on baseball and basketball and one other subject I can't remember when I was 17, but this young man is really going into technical analysis and pattern, recognition in a deep way. Now, if we take a look at one of these other indices from India, you'll see that yes, Marshall, you flat got that right. You hit that one right on the head. You Oh, Marshall, you're sick, demented, and perverted, and those are your good qualities. Okay, you'll take a look here at the Nifty 50 from India, and as you can see, we've been pretty much in a downtrend like we have been across the globe on just about everything else. So you can see the patterns and the ratios in the Nifty 50 from India. There's no different, folks, because these are based on fear and greed. That's the only thing that makes the market really go up and down. The rest of the stuff is just cannon fodder. That's pretty much the the bottom line. So that the answer to that question is that it doesn't make any difference what market you're going to look at. As long as it's liquid and as long as it's active, these patterns are going to work. They don't change. They haven't changed. They're not going to change. And that's pretty much the bottom line of looking at it over a very long period of time. Now, the next question that we had was about when we look at some of these patterns, how do you determine, to get into some of these things, when the markets are really strongly trending? And so what I did last night was I answered the email, and I sent out this chart of the British pound, which we all know has been in a very, very strong down move for quite a few weeks and months, and we had a tremendous break from 144 all the way down to 138 and change. And then you'll see here over the last 2 days we had a very nice symmetrical ABCD pattern that was forming, that looked like it was going to be a pattern just like all the others that we've seen along the way. And so what we want to do now is we want to take a look at that pattern, and all I have to do now is find the doggone thing. Why do they hide from me? I'm going to have to figure out a way to categorize these puppies so that I know what the heck I'm looking at when I'm seeing some of these things, because it's a little frustrating when I get ready to go in and look at it, and then all of a sudden I can't find it, and I doggone it, it's just I know it's here. I found it. I found Mr. Valentine has set the price. We are back. I hope. Looks like we are anyway. However, we do have a pattern here in the British pound where we've completed an ABCD pattern, as you can see. Then we've also backed off 100 pips, which is the equivalent of $625. And actually, we're actually going back lower now during this time. Folks, we've got a really interesting setup happening right now as we speak. In fact, we've got to always have a bunch of them, but I wanted to show you the one that really looks the most interesting to me. And it's related to crude oil and everything else, but we'll put this up here. We've put this in here before, but now we're going to expand it and let you take a look at it. This is the Canadian dollar versus the U.S. dollar going over the past year. And as you can see, we've had this really strong trending market to the upside. We're having the best correction that we've had since the March-May period of 2015. And so what we're looking at now is we're watching the market make a 61% retracement, and it is making it at the also at a 382 retracement of the low from May of last year. So you got two major ratios in here. You have a really nice cycle component between May and October to February. So this is the longer term daily. Now, what I usually do is when I'm watching something like this is I like to see what's happening on a shorter time frame. And so what I'll do is I'll go down into a 4-hour chart or a 1-hour chart, and I'll try to find some other patterns. And as you can see here, over the past 3.5 weeks, we've been heading down towards this 135.26 level. The low so far tonight, last night, was 135.16. So that has completed all of this pattern. What's good about this is that you don't have to risk an arm and a leg, because if it gets much below 135, this puppy is toast. So it's got a lot of things going for it. It's got the 61% retracement, the 382 retracement, the long-term trend line. And if you like trading with the trend, and you can't argue that this trend is up, this is where you want to pays your money and takes your choice. That's basically what it is, because what it see is what it could be, and what it might be is what it is, and what it shall be is what it will be in the end. So remember that. The words of Mr. Lewis Winthorpe III from Duke and Duke. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to be taking a look at the hourly chart of the Treasury bond. This is the 30-year bond. As you can see, there is a trend line. You can see that by the green line that's there. And it's also an ABCD structure. That comes in around the 65.12 to 65.10 level. The last price that we were looking at was around 165.18, so it's getting down near that level. And of course, this is when the risk is off and people want to buy stocks, and it's just the exact opposite of what we have going on. Longer term, I believe the bonds they're really going to be they'll be bearish, mainly because at that 171 level we had that big shooting star pattern on the weekly chart that was a beautiful butterfly pattern also. So to me, it looks like the bonds aren't going to go a lot lower. The question is, are they going to be pulled down by stocks? Are they going to be doing their own thing and going down? So we'll just take a look at that and just see how that keeps us busy here for the rest of the day. You want to watch it very, very closely, though, because it's very interesting. Now, we have one other market that is under some pressure today, and it is the same situation like what we had in the British pound when we had the perfect pattern last night. Up at that 140.20 level in the British pound, we were having the same type of pattern occurring in the euro. Now, this is a 15-minute chart going over the last 5 days in euros, and you can see we made a perfect ABCD retracement up at the 61% retracement, and now we're already down at the 109.55 level since the time I posted this, and where we are now. So it's dropped another 30 pips into that level. So we're going to test that level, and we're going to find out if it's going to keep cascading through the level. There's a cycle that comes through sometime towards the end of the day. Whether that'll be much of a help or not, I'm not sure. But the overall pattern on the upside, you want to sell ABCD patterns when the market's going down, and you want to buy ABCD patterns when the market's going up. That's the C. Buy them when they're crying, and you sell them when they're yelling. And the main thing about trading is do not take the losing trades. It's very important that you understand that. Losing trades spoil your day, and they do not help your equity. So keep in mind that you don't want to trade on losing trades. Just only take the winning trades. And that's why you're here at TFNN, is to take advantage of all the good information that we have from Jay Bird, Pete, Gator, Mr. Z, all the folks in here, Marshall. They're doing a great job of guiding us along the promised land. So we'll see what happens. Now we're getting ready here to talk a little bit about the gold market, because it's been having a little bit of trouble, which is not unexpected. Silver is the problem with this, is because we've had a situation where we've been going down a lot more in silver than we've been going up anywhere else. But first of all, before we get into that, we have to talk a little bit about the stock market, because there's a possibility here, and I'm not sure that this is the case, that we could make back to 2020 to 2030 in the S&P. And if you'll notice here, you'll see the ABCD pattern in blue here, where we made the double bottom back on February the 11th, and then we had the really strong rally, and then we pulled back to a perfect 38% retracement, and that measures all the way up to the 2028 level. And so that could easily do that. The $64 question is this, folks. If you'll notice that little red box up there where it says 618 and 1.27, that is going to be really, really important, because you could bill cause for telling you that the market could be making a top in here, and that would be happening today. Now, whether it's going to be happening or not, will have to remains to be seen, but we do want to keep an eye on it to see if that's going to be the case. And the reason why I wanted to do that is, if you give me 1 second here to pull this up so I can show you the pattern that I'm looking at here, because it's a beautiful pattern that we call the 1, 2, 3, 4, 5 expanding triangle. It was known as the T6 pattern by H.M. Gartley, and this measured up to 1973. So far, we got up to, I believe, 1968 or 1969 so far this morning. The ABCD structure that we just talked about, you'll see it there, the 382 that we had just yesterday. We couldn't even take that low out, and then we expanded even higher. So this is a valid pattern over the past 10 days, and whether it's going to work or not, I don't know. Anything above 1978, 79, 1979 would say that this is most probably a failed pattern, and we're going to go higher into that 2020, 2030 level in the S&P. But frankly, this pattern on an hourly chart certainly looks interesting for a potential sale. And since we're going to be up about 130 or so in the Dow, that's something that you might want to think about, because every time this puppy has rallied, we've been different. Now, we have a very special guest today. At 9:30, we're going to have Arch Crawford on from Crawford Perspectives, and he's going to be chatting with us, and we'll see what kind of good information he has. He's the resident financial astrologer in the markets, folks. There's no one's got more experience than him than that, and he's a very, very nice fellow from Oxford, North Carolina. Anyway, we'll have Arch on at the break, and we'll see what happens, with what he has to say. The next thing that I wanted to mention was the fact that we have the same type of pattern in the S&P that we have in the Dow Jones. I mean, they're basically doing the same thing. Now, the Nasdaq is lagging badly, and I'm not sure the reason for it is it's weaker. That's the reason. I don't know what the rest of it is, but we'll see what's going on. Now, the one that I watch the closest, of course, is the New York Stock Exchange Index, and this is the one that I want to show you right now. If you'll give me 1 second here to get this up, and we will take a look at it. And that's exactly right, Gator. You got the later Gator. The price of that exact number in the S&P, the ABCD, comes in at 2028. But there's a little window there between 2022 and 2028, and it could be 2058. Who knows? But that's pretty much it. But this is the ABCD structure that that we thought that was going to bring the good rally in, which we started on February the 12th, and from that level, we've had a really strong rally, and we could easily get up there another 3%, and that would it would make it quite a bit more of a rally than what we've got going right now. It has to clear 1972. If we clear that, then we're looking at something that could be a lot stronger. Now, we have a little quagmire here because the bonds are telling us they're coming down into some pretty strong support with some patterns here, and that means that risk on might come in again and people could start buying risk off, excuse me. Let's get this right. Risk on, and they would start buying bonds again, and that might put a little pressure on stocks. But trade one at a time, folks. Trade what you see, not what you think.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, this is TFNN, Larry Pesavento, with our special guest, Arch Crawford of Crawford Perspectives out of sunny Tucson, Arizona. Arch, are you there?
I am here.
It's good to hear your voice again, and it was nice seeing you the other evening. Listen, my friend, we posted a chart in here of the Shanghai Composite versus the S&P 500. Do you want to give us a rough idea of what you're looking at here? And then we have 2 other questions outstanding, but why don't you describe what you're looking at here?
Okay, well, we're looking at the Shanghai is what touched off the big drops in August and September in particular. And since then, they've been rallying, but very weakly, not a good percentage. So yesterday, it dropped 6.4%, which knocked out all the positives. and it's approaching the previous low from August. And if it breaks that, then it could set off the whole world into another tumultuous decline.
Are you seeing anything astrologically that could maybe trigger this?
Well, I thought that the last week we had Friday was the option expiration, and Monday was the 22nd, I think it was the full moon. I thought that might do it, but we have gone a little bit higher here yesterday, and yesterday, though, it did it on lower volume. So it's a very, very mixed picture right now. The Dow is the furthest above the 50-day moving average yesterday and apparently this morning, and the Nasdaq is the weakest. It's not quite up to it yet. The S&P has gone over it, and the broader indexes of the New York Composite and the Wilshire have not yet gone above it. So that is the fact that the S&P and the Dow did is positive. The fact that the broader indices have not is a negative. The fact that they went higher is positive, and the fact that they did it on lower volume is negative. So it's a very complex picture right here.
I can understand that. Sam, we have a question from one of our listeners on a situation like we're coming into something like this. How do you handle the market? I know just from our talks through the years that you do like the option markets. Can you tell us how you're handling this for your service and also for yourself, of what you're looking at right now as a position?
I do not recommend options for clients.
Well, that's strange. That's a good idea because options are pretty tough. Now, do you do mainly futures? And isn't that correct? You do the Dow Jones futures and the S&P futures and the Nasdaq futures?
Yes, on the hotlines I do that. Do those, and I do mention the cash in the newsletter primarily. The Dow Jones, the S&P, the NDX. Sometimes the NYA or other things.
Mm-hmm. Sam, we've got I call him Sam, folks, because that's his nickname to his friends. But Arch, we have this new moon coming up and a solar eclipse coming in on March the 8th. And I know you've done a lot of work with eclipses in the past. What has been your what do you think is going to be happening at that time?
Well, around the eclipses, from like the newer full moon before they start to the newer full moon after the eclipses, and there's usually 2 and sometimes 3 in a series, a new moon and a full moon, or then a full moon and a new moon, and sometimes the other one again when they have 3, where there's one really tight in the middle and the other 2 are less so. So usually those times do have an unsettling, they throw unsettling conditions into the markets and to world affairs generally. The ancients were afraid particularly of solar eclipses, but they do, when the market is becoming emotional in any way whatsoever, the eclipses, the full moons and new moons have a stronger effect, and the eclipses are absolutely big deals. When any market you're looking at, any commodity, any currency, any future, anything like that, that's becoming emotional in its trading will be more strongly affected by the eclipses and the normal new and full moons.
Sam, I remember back in 1987, you were still in New York at the time, and we were chatting, and you were telling me about the eclipse, and I believe it was September of that year, right before we came into the crash, and you alerted me to that being, something really, really significant. And boy, it sure turned out to be a monster move on the downside. Is there a possibility that we could be in an environment where we could see a market down 10, 12%, maybe even more in the market in one day?
That's always a possibility. I mean, we have these flash crashes every now and then and apparently they haven't done anything that will stop those, so I assume we'll have some more in the future. On the percent changes, it's likely to be around the eclipses, as I said, from the new moon or full moon before the eclipses to the new moon or full moon after the eclipses. It could very likely be one of those dates. Yeah.
Okay.
Something.
Sam, someone's asked a question about, I'm sorry, folks, I keep calling him Sam out of habit. This is Arch Crawford from Crawford Perspectives. Arch, we have a question for one of our listeners about foreign markets. I know once in a while you'll mention the Nikkei and also the Hang Seng occasionally in China. Do you ever look at the Indian stock market or the German stock markets?
The IBD has a good chart of how they're doing on the back. Usually it's about near the back of their second section. And I keep an eye on those. But I also follow the MC, what is it, the MC something CI, or that's the sum of many of the major international markets. And actually, my predictions have been much better in that index because the Dow and the S&P have been, the American stock market has been much more manipulated by our government, I believe. But
I think so too.
like last year,
Sam, we've got to take a break here. Could you stay with us for another few minutes when we come back from the break, because we want to tell the folks how to reach you and stuff. So we'll stay with us and we'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're talking with Arch Crawford of Crawford Perspectives. Arch, we have a question about the 30-year Treasury bond and the Treasury notes. Do you have an opinion on this convexity of negative interest rates that we're hearing about?
One of the things that I have not heard anyone mention is that these central banks are buying all these bonds, and we were thinking, what are they doing? This is very dangerous because the rates are already at zero, and how could they possibly do anything but lose money? So now 24 countries have gone to negative interest rates, and the bonds that these central bankers own have gone through the roof because as the rate goes down, of course, the bond price goes up. So their asset base is extremely making a lot of money for them, but not much for the public.
Well, that's always the case, isn't it, Sam?
Well, it's the way they usually try to work things, but I didn't I didn't realize it had been so blatant.
Mm-hmm. Sam, if the folks want to reach you at Crawford Perspectives, what's the best way for them to contact you?
Google Arch Crawford with in parentheses. So the fastest way to get hold of it, but it's Crawford Perspectives at earthlink.net is the email, and the website is www.crawfordperspectives.com.
Okay. Well, that's great. I want to thank you for being on our show today. And any chance you're going to be free for lunch today later on?
Possibly so. I
might give you a call a little bit later. Maybe we'll have lunch.
Okay. I have hotlines at 2 and finish at 2:20 Eastern, so make it a little late.
Well, that'll work out just fine. Listen, my friend, thank you for joining us, and we'll have you on again soon, okay?
Very good, sir.
Okay, bye-bye. Okay, folks, that was Arch Crawford of Crawford Perspectives in Tucson, Arizona, giving us his ideas of what's going on in some of these markets. And he's always in the top 20 of the Timer Digest. Sometimes he's first or second, sometimes he's in the top 10, but he's always in the top 20 over a very, very long period of time. So he does have a good historical record of what's going on. Now, we need to talk a little bit about the gold and silver. We have a situation where there's a lot of people that are very, very bullish gold out there. The problem that we're having here is the possibility that, we maybe not be nearly as bullish as we might think. That's the $64 question, and we want to be able to try to figure this out. One of the things that I'd like to show you now is the chart of the silver market, because you'll see that the silver market has been much, much weaker than the gold market. We've been in pretty much a downtrend. We're ready to break this, 1494 level in silver, which would be setting up another ABCD structure, another 50 cents lower, if that's going to be the case. But the longer-term picture in the gold, it certainly has a possibility to go a lot higher, but really it hasn't really done too much in the last few days. And when we topped a week ago Thursday, and since that time we really haven't done a whole lot on the upside. So we want to be able to keep an eye on what's going on, with that market. Now, someone's asked a question about the Nasdaq versus that same pattern that we're looking at in the S&P. Is that reverse point wave triangle, the T6 pattern? And I'll post this in here so you can take a look at it, and you can see that we could easily get up another 60 or 70 points in the Nasdaq if it has the capability of doing that. Now, we're very, very close. We just made an ABCD pattern in the S&P 500 over the last hour period, coming in at the 1955 level. That's a very strong support, and if that 1955 fails, you're going to be looking at a potential of a much lower market as we move down the road. Okay, now I have a request from one of our listeners, one of our folks from up in Canada way, and he's been following the price of Sears Holding, which is Eddie's, I can't remember Eddie's last name, Eddie Lambert. That's his, brainchild, and it's been in a lot of problems over the past few years. And we got all the way down to $14.58, where we completed a butterfly pattern and a whole bunch of ABCD patterns. And so far, it is held. The $65 question, which is $1 more than the $64 question, is if it goes below 15 or 14, what happens? And folks, that's a scenario that you don't want to be long Sears Holding if it gets below that $14 level, because it would have price objectives going down into the single digits, and you don't want to go through that. We had the same thing happening with JCPenney. If you remember a few years ago, JCPenney was under a great deal of pressure, and they took it all the way down to, I believe, $6 a share. And since that time, we've rallied 50%, but it's still trading at around 9. So, you don't want to get involved with these. These are things that you got to put a stop in, and you just got to be careful of doing that. Folks, people that trade or that own companies like this, whether it's Carl Icahn or Warren Buffett or Eddie Lambert, it doesn't make any difference. Bill Ackerman, none of these guys, they don't use stops. They use money management stops. In other words, if they lose 5%, or, well, sometimes they don't even put those stops in, but they will definitely look at something like that as a fail-safe mechanism. And usually what will happen is, until they really get into a lot of trouble, will they not even do any of that. So they don't use a traditional stop like we do. There's just there's no way that they do it that way. I mean, they have too much money, for one thing. If they put a stop in there, they would go hunting for those stops, whoever they is, and that would really give it an idea of something a little bit more sinister of what's going on. Okay, another question that we're having from our listeners this morning is about what's happening with the German DAX during this rally, and we were looking at this last night, and as you can see, we've completed the ABCD pattern in the German DAX up at the 382 level. And today, early this morning, we had a nice rally as the market was moving up, and we almost matched that high from early February. Now, remember, we took it out very easily in the Dow Jones and the Nasdaq and the S&P, but we did not do it in the German market, and that, in a sense, starting to sell off after being up 2.7%. So that's the main thing. The Hang Seng Index has also had a strong day today. We were up about almost 2.5–3% in the Hang Seng, and approaching that 19,500 level, which was the high we made in mid-February, towards the end of February. So there's a possibility here that these markets are incredibly bullish, and we could be looking at a market that wants to go a great deal higher. But today will be a very, very good spot to test whether these are going to do it. 877-926-7748. Let's try that again.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got the stock market pretty strong so far this morning. We have a little bit of a correction now from the high we made up at around 1869. We've come down and we've just about completed that ABCD down at 1955 in the S&P. If we get much below 1953, the correction's going to be a little bit more. But as we mentioned before, we have that 1, 2, 3, 4, 5 expanding triangle. That's known as the T6 pattern in Gartley terms, in Gartley's book from 1937. So it's a very, very powerful pattern. When it works really well. And when it doesn't work very well. Wow, what a revealing thing to say about trading. So just remember, you got to protect yourself against yourself, and especially against me, because I'm wrong just like everybody else is a lot of times. So keep that in mind when you're watching some of these things, because some of them work, some of them don't work, but those are the ones that you have to protect yourself, as the ones that scare you the most. One of the ones that we're looking at today, of course, is that Canadian dollar, and keep a really close eye on that, and also the Treasury bonds, because we're hugging this line here at 164.16, 165. 17 to 164.16 in these bonds, because that's the first really good ABCD correction that we've had on the downside in bonds over the past few weeks. So we want to watch that one very, very closely, and that'll be related to the risk off, risk on environment of what we're looking at. The Japanese yen is all the way up back to the 113.5 level. We did have really strong support down at that 382 at 111 and change, and we've rallied 200 pips in that this week. So that's telling us that that's the reason probably behind some of this stock market rally, and it's been across the globe. It's just been it's been Asia, it's been Hong Kong, which is Asia, and also the emerging markets, and also in the German DAX and the FTSE have also had pretty good rally. So 877-927-6648. Have a wonderful weekend and do something kind for someone who has a lot less than you today. Hey, God.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.